Hello, I'm Kevin Alderton, and this is a presentation called IR35, The New Landscape. I'm a director of X5 Chartered Accountants, and I've been working in the field of IR35 for many years, and X5 Chartered Accountants are part of the Dragonfly group. Firstly, a disclaimer, this is for guidance only. Please don't rely upon this in isolation to make a decision. If you're unsure, take professional advice. And at the end of the presentation, I give you our details if you would like to contact us for any help or clarification. So I'm going to look at the history of IR35. I'm going to look at the nature of employment and self-employment status. I'm going to have a quick word on the gig economy. I'm then going to consider the different types of entity which might be paid. The new system, which is coming in from the 6th of April 2021 for the private sector. I'm going to look at status determination in that context, and then we're going to look at the existing rules which will apply to smaller companies and consider the employment status factors, the CEST, which is the HMRC test, the soft landing, and a little word at the end about the future for the construction industry. There's a long history of considering whether an individual is employed or self-employed. Now, this goes back to the 1950s. And a lot of the early cases weren't about tax or national insurance or any such thing. They were about the safety of construction workers after the Second World War, when a lot of the large construction companies were fairly casual about recording details of their workers. And there were cases of workers being killed or injured, and the employer didn't even know their name and address. And it was from the back of this legislation that the very early attempts to legislate here were made. And those were initially mostly in the construction industry. What then happened was that from the 1960s onwards, using self-employed contractors became much more common for other industries, and the legislation started and evolved. I think it's fair to say that it's been an unsatisfactory area for many years. IR35 itself, the term stands for Inland Revenue, which shows how old it is, and number 35 was simply the number of the press release relating to this back in 1999, and the initial legislation was in 2000. It's been a very unsatisfactory area because we've had so many apparently contradictory cases on similar facts, and there have been several attempts to try and codify and clarify the rules. And as we'll see, it's quite a complicated area. And this new legislation is the latest attempt to try and bring certainty to the whole area. Now, why is it a difficult area? It's very easy for us to think of a self-employed person, a window cleaner, an electrician who comes to your house to mend something. There are lots and lots of examples. Similarly, almost everybody in the working population has been an employee at some point in their life. So it's quite obvious to most individuals what an employee is. So why should there be a problem? And the answer is that there are some really big grey areas. Most typically things like computer contractors, people who are working on a contract for a short time, the construction industry. There's a very broad range of areas where it's not immediately clear whether someone has a contract of service, which implies that they're an employee, or whether they have a contract for services, which implies that they're self-employed. And we'll look at this now in more detail. So firstly, why is it important? Well, self-employed contractors generally pay less than employees. And that's for two reasons. One is there's a broader range of expenses that can be claimed in a context which isn't employment. So if you're a self-employed person or in a company, there are whole sets of groups of expenses which are relatively standard to claim. And then in addition to that, you can do other things with the remaining profit. You can pay yourself dividends, you can leave the profit in the company. It's quite different from an employee who simply receives their money net of tax and NI, and off they go. On the other side of the coin, employers don't want to employ contractors or people who are working either for a short term, or they may have various reasons within their organisation why they don't want to have the headcount. And of course, most employers would much prefer to avoid things like sick pay, maternity pay, paternity pay, and all the other obligations which come with being an employer. So both sides of the argument have historically had a vested interest for people to be self-employed rather than employed. Now, within employment law, I'm not an employment law specialist, but there are three possible outcomes: self-employed and employed, which I've described. But there's a third status called worker. Now, a worker is probably self-employed, but with employment rights such as holidays, the national minimum wage, etc. But that doesn't mean they're necessary for PAYE for tax and NI purposes. For tax and NI, we've only got two outcomes. We've got self-employed or employed. The gig economy has really brought this to the fore. One of the big economic changes in recent years has been the move away from employment for a lot of types of activity. And the most recent cases are the Uber case, which you may have possibly seen in the media recently. And there was previous to that a case with Hermes, the delivery company. And in both cases, groups of workers for those companies took those big giant companies to court and said, we are workers, we would like our rights, we'd like national minimum wage, we'd like holiday pay, etc. And in both cases, the higher court, in the case of Uber, the Supreme Court, has said, you're right, you're workers for this purpose. And they've determined that these individuals, which many thousands of people, have worker status. To be fair, I haven't seen the reaction yet of Uber, but Hermes did create something which I thought was quite interesting. They called it Self-Employed Plus, which is basically a self-employed contract, but with a lot of benefits within it, such as holiday pay, to make sure they comply with worker status. But overall, I think it's illustrating a new trend, which is part of the overall aim of the government and the Treasury to have as many people within the broader employment net as possible. So who might receive a payment or be a contractor? It could be an individual, it could be a service company. This is a company which exists solely as a mechanism for an individual to operate their company, or it could be what's called a managed service company, which is really lots of individuals joining together and frankly trying to get around the rules by having what's known as a composite company. Now, HMRC have tried very hard to legislate this possibility away, and so I'm only considering personal service companies here for the reasons I described. If you're thinking of employing an individual, or you are an individual in a role which might possibly be considered to be an employee rather than a contractor, I urge you to take advice, because you are almost certainly making yourself potentially liable to paying all of the employment benefits and possibly back NI and NIC. I've been involved in advising on a case where this had happened, and HMRC tend to have a bit of a sense of humour failure if you paid someone over periods of years without paying the employer's NI over or giving the employment rights. So be very careful about employing an individual. If there's any possibility at all, they could be construed as a contractor for this purpose. As I said before, always contact us for the details at the end of the presentation. Well, let's look at the new system. What it does is it brings in two tiers. The legislation considers there's one tier, but there's an exemption, which I'll consider in a minute. It introduces, first of all, it abolishes the term IR35 and replaces it with off-payroll working. I think this is something HMRC have been doing for some years with, as you can see from this presentation, mixed success. And from 6th of April 21, there are two systems which will operate in parallel. Now, one is for larger companies, and if we'll come to the definition in a moment of a larger company, and if the larger company is the end user and employs a contractor, doesn't matter what mechanism they've been using, it's up to the larger company to determine the status of the individual. There is an exemption for smaller companies, which is where we get the two tiers, and in that case, it remains with the recipient to determine the status. So which tier? This is the small company exemptions. I've listed them there. Turnover of less than 10.2 million, balance sheet total less than 5.1 million, and an average number of employees of not more than 50. Now, the company must have two of those three to qualify as small. And if it's small, all deals are off. The rules remain the same as they are now, and I'm going to describe those in more detail later. If you're a large company, if you have got two of those which are above those totals, then the new rules apply to you. These aren't completely new rules. They've been in the public sector for some years, since 2017. So if you're a large employer, or if you're working for a large employer, you don't qualify for small company exemption. Then if you're the end user, if that person is working on your project, Doesn't matter how many intermediaries there are. It could be a chain of agencies, and this does happen. It could be 3 other agencies. If they eventually are doing the work for you, then it's your duty to determine the status of that individual. These rules were introduced in the 2016 budget and apply to the public sector, which is quite broadly defined. It includes local authorities, it includes the NHS, it includes various quangos, as well as central government. So we've had experience of working in this area since 2017, and I'll speak in a minute about what that experience was. Generally, this is the test which we're going to look at. If the intermediate company or companies didn't exist, that's the personal service company, would the relationship between the end client and the worker be that of employer and employee? Now, it's the large company that makes the decision. If they decide that that relationship would be one of an employer and employee, then they will treat the employer as a worker. They might determine that the contract falls outside the legislation, but if they get it wrong and HMRC subsequently disagree with them, then the end user, in other words, the large company, is liable for the unpaid tax and national insurance. And our experience in the public sector was that almost nobody would ever be determined as falling outside the legislation, aside from a few individuals working for central government. And I'll leave you to draw your own conclusions for that. Now, more likely, the end user will determine that everyone falls inside the legislation and will insist on a direct payroll or an umbrella company, or possibly using a personal service company. I'll come to that again further. So the employer, the end user, the large company, it could be a bank, a pharmaceutical company, it could be anything, any company that's over those initial thresholds that I described, then they must issue, in respect of every contractor, a status determination statement, which says whether, well, it says that IR35 applies. If they review it and decide that IR35 doesn't apply, there's no statutory duty to do anything, but HMRC have said it's good practice to say we've reviewed this contract and it falls outside. Now, as I described, the employer is liable for underpaid PAYE and NICs until the status determination statement is issued, or if the decision is wrong, unless it's provided with false information. But really what happens is the employers decide you fall inside it in almost every case that we've seen. Now, the status determination statement must be reasons as to whether 35 applies or possibly does not apply. They must take reasonable care, and there is a client-led disagreement process. So either the worker or the fee payer may object to the decision, but HMRC won't get involved. There's no right of appeal. There's a 40 then, so let's imagine you're working for a large company. They say you fall within IR35, you object. The client's got 45 days to consider it, must give reasons for its conclusion or issue a revised SDS, status determination statement, to the worker and fee payer. But this is completely outside any legal framework. It's just something suggested in the legislation, but it's got no teeth at all. So in practice, the chances of, and we did have experience in our firm with a local authority asking them to change their mind, and fundamentally, they will tell you to go away, which was our experience. So whilst this disagreement process exists, my own view is that it doesn't have many teeth, and it's unlikely that a large employer is going to potentially expose themselves to large tax bills over a period of years, unless they're absolutely certain. And so they're very likely to err on the side of caution. The mechanics of how the fee payer applies the PAYE and NIC I've listed here. It's called a deemed payment. So the deemed payment is the payment from the end user to the worker, quite possibly going through some agencies. There's no entitlement to SSP and there's various things I've listed there. No student loan deduction, and the RTI returns, which are the monthly payroll returns, will show the off-payroll worker marker. The fee payer is liable for the employer's NICs and the apprenticeship levy. The net amount's paid to the PSC, full VAT is also paid, and at the end of the year you get a P45. We have experience of this with some employers before. Now, what I think is happening in the private sector is this isn't really happening much in practice. What's happening is that this system I'm describing here, where the worker has this method of receiving a P45, even though the work was done through a company, reporting the income in their personal return, and for tax purposes, the salary or dividend paid to the individual outside from the company are basically ignored and not reported. I think with private companies, generally, because almost all of them, or a very high proportion, are using agencies, they're saying, no, we're saying we're not interested in personal service companies. And the reason for that is it's a bit more cumbersome. So they're saying to the people down the line, please use an umbrella company. An umbrella company effectively operates this through a third party. It's a way that the employer can be more confident that it's been operated correctly. But there are some companies who will operate this system. But we're seeing a lot of cases of large companies saying, we're not really interested in any of this. If you've got anybody who might conceivably work for us, then we want them on through an umbrella company. Or similarly, we're having some quite interesting blankets. We will not employ anybody who's a self-employed worker. And we're seeing that with several large companies with clients where they've just said, we're not even interested in taking a risk. Please don't put anybody who's a contractor unless they're being paid under PAYE on our job. Now, for smaller companies, there's no substantive change. Fundamentally, if you fall under the threshold, this is the end user. So it has to be a relatively small company that's usually a contractor. Now, the determination is by the recipient. This is if it's a personal service company. I already mentioned the warning about employing individuals because that's different. But if you're paying to a personal service company and you're a small company for that purpose, you don't have to worry too much. The recipient has to worry. So what I'm going to do now is have a closer look at those rules which apply to smaller companies and personal service companies who are serving those. I'm going to start by just describing the history of this. Now, it's a case here, you may think it's very dull, but I think it's quite telling. It's a case from 1968 in which the judge, you can see from the language, the servant agrees that in consideration of a wage he would provide his own work or skill. It's all written in the masculine and it describes servant and master. But what this case did was it set up the very first legal recognition of what it is to be an employee and what it is to be self-employed, and it said there was a personal service, in other words, given by an individual, and there was mutuality of obligations. In other words, you're expected to work, and the employer is going to pay you, and also there were considerations of control. So this was the very first embryonic consideration of this area in 1968. This then was refined over a period of years, and we finish up with 5 real elements of the test. So these are tests that you'll apply if you're a personal service company and you're receiving money to decide whether or not the contract you've entered into falls within IR35, and I'll go through them. So the 5 are control, personal service, mutuality of obligations, integration, and economic reality. And I'll look briefly at each of these. Control, questions such as, is the task or project based? Is it that you're being paid some money to do a piece of work, or is it you're being paid by a day, by the hour? Who's choosing where you work? Can you work at home? Or is the employer saying you've got to come to an office? Obviously, in the context of COVID, that's changed quite a lot more people working at home. Who determines the hours of work? Are they the same as employees, or have you been given a project to design something? And the ultimate employer is not really interested when you do it whenever you do it on Sunday night, if you like, as long as you do the job. Or are they saying you've got to be here 9 till 5 or whatever? How much you supervised? Is there a line management overseeing you? Are you using your own equipment? Who's decided the rates of pay and who's determined all of this? So if there's an element of economic risk, if you've quoted £5,000 for a piece of work and you've given no quote as to how long it's going to take you, where you're going to do it, when you're going to do it, and you're going to use your own equipment, that's a strong indicator of being self-employed. If the converse applies and you're working 9 to 5, being paid an hourly rate with no control of your own work, you're being supervised, those are all indicators of employment. But don't forget, none of these individually on their own determine status. The second category is personal service. So by personal service, it means, is it you? Is it an individual doing the work? Do you have a right of substitution? If you're not well, if you've got other work, can you send somebody else? It's about the right. It doesn't have to have ever happened, but if it has happened and other people have gone into the organisation through your company and done the work on your behalf because you've been preoccupied somewhere else or on holiday or whatever, then that is compelling evidence that it isn't a personal service. is it fettered? By fettered, it means, is the right of substitution determined by the individual, or is it something that, or is it something that the company, in other words, the end user, has got to decide? So if you can choose who to send, that's a clear right of substitution. If you need the authority or the permission of the person that you're working for, that's called fettered, and that's much less powerful. And substitution, if it's made, has to be made by the personal service company, not the client. Third category is mutuality of obligations. There's an ongoing expectation that the engager will offer work, you'll accept it and supply the service. It's exclusive of an arrangement between the two of you, and typically it's relationship built over time. Those things I think are fairly clear in most cases. Integration. Is the worker part and parcel of the organisation? Have you got a title? Have you got office space? Are you on the telephone, email, extension lists? Do you perform work that's similar to what everybody else is doing? Are you sitting next to someone in an office or a factory or wherever it is and doing the same work as them, but just in a different status? And we'll come to an element of integration in the case I'm going to speak about in a moment. Economic reality. Is there evidence the individuals in business on their own account? Have they got their own premises? Have they got their own major tools and equipment? Is there an element of risk? Do they have the capacity to make profits and incur losses? I mean, if you're just being paid an hourly rate, irrespective of how well you do or what you do, that's a strong indicator of employment. If on the other hand, you've got a lorry and you're driving around and you've supplied that lorry and you're paying to maintain it, that's a very strong indicator, or any other big piece of equipment, that you are self-employed. And have you got other customers? Now, again, there is no one test. There's no one element of this you can pick and say, oh, yes, that applies. But it's a balance, and I'll come to how the revenue look at this in a moment. So I want to talk very briefly about an old case. This is Dragonfly, but this is one of the very first determined cases. This was from September 2008. It was a husband and wife company, although really it was the company was a vehicle for the husband, whose name was John Bessel, working as an IT systems tester. And he was at the AA headquarters in Basingstoke. And if you choose to read the detail of this case, which is quite entertaining, he was playing for the sports teams. He had his own pass to get in. He had his desk, and he failed with an additional tax bill of 99,000. And we look at why. So it involved the High Court. This went to the High Court. It didn't go to the, as it would have been then, House of Lords. It involved a number of contracts with the same client, even before IR35. And what they were doing was they were trying to insert clauses to make it outside IR35. Initially, there was no substitution clause. There was no unfettered right to substitution. And then whilst the contracts were amended, it was seen by the judge just that the contracts have been changed to not reflect the underlying reality of what had happened, but to perhaps get around IR35. These are the old IR35 proof, in strong inverted commas, proof contracts. So the key lesson is what the contract says is not enough. The court will find, if it goes to court or a tribunal, on the substance of what's really going on. It's the substance of the relationship, not the form it's taken. Doesn't matter how many IR35 proof contracts you've got. If what you're doing is not living that, it won't work. And so how do we decide? So having listed those tests, the factors seldom all point in the same direction, and decisions are balance of probability. And HMRC have recently revamped their employment status for tax. Now, this is I put the link there. This is an online test. It's known as the CEST, and you put in details about the relationship you have between the contractor and the end user, and it's quite detailed. And HMRC will accept it, but you have to be very careful. It will give erratic results. You must be absolutely sure that you have precisely and honestly filled in every category. Otherwise, you can't rely on it. So HMRC will stand by the results you get from the tool, but the warning is the information has to be proved, to be checked and found to be, if it's found inaccurate, it won't work. So HMRC won't stand by the results actually through any contrived arrangement. So it has to be quite open and honest. So HMRC will rely on it, but only in a fairly limited context. and keep a copy. So if you do it, it'll give you a printout. Make sure you keep a copy of that. So if HMRC come knocking in a subsequent year, you can say, we did the CEST and this is the results, and it does record on there all the things you put in. Now, the new changes, HMRC have done what they've done in another context as well, is what's called a soft landing. That means that once the new rules come in, which really the new rules only relate to the larger companies, if they have a look at you as a consequence of that, they will not generally use this as a reason to reopen lots of history before the change in the rules, unless there's a suspicion of fraud. I can't say it. And in that time, then they could. But otherwise, they're trying to be gentle. What they're trying to do is encourage everybody to properly adopt new rules and not be frightened that the revenue are going to use this as a mechanism to go back. And finally, a word on the construction industry. There are proposals to change the CIS scheme to something similar to deemed payment status. In other words, rather than CIS payments, the contractor would have to make PAYE and IC contributions. Now, this hasn't happened yet, and it might never happen. I think with COVID and Brexit and all the other things the government have got to think about at the moment, I think it'll be a while before they introduce this, but there is a general HMRC proposal to discuss around this. I hope you found this interesting. I've put my email address there. If you have any questions, do email me or call our office and you can speak to one of us. And thank you very much for listening.